First one comes in from Bangalore. Balakrishna V calls us. Hi, good afternoon, Balakrishna.
Good afternoon, sir.
Tell us, what's your query?
So good afternoon. So actually, I bought Biocon total 100 quantity for price 450.
Okay.
So I just want to know whether I have to hold this stock because the stock is when I bought this stock, it's still going down now.
How long ago did you buy this?
Like 1 week back.
1 week, and it's a trade, or is it an investment for the long term that you've made?
Short-term investment, so.
Okay, Mayuresh, what's your quick take on Biocon?
Afternoon, Sumera. No, so this stock, as a disclaimer, lies in terms of our global focus lists. The numbers had been a little bit disappointing, Sumera. But again, the kind of inflection point that the stock is looking at in terms of its biosimilars portfolio around FY21 and FY22 and the monetization thereof seems to be very, very fruitful from an earnings perspective. The second element obviously is expected to be the other contributors, both in terms of the Malaysian unit and the FDA concerns, hopefully over the next few quarters should get away. And the contribution that comes through in terms of its Syngene holding as well, which is doing exceptionally well in terms of the CRAMS outlook. So I think the earnings outlook spread over the next few quarters look reasonably placed. The EPS rating is fine as per our own methodology. And what you're probably looking at is how the stock might behave in the next few quarters as well. So our own take is that the earnings ratings look stable enough. Yes, this quarter was a patchy one, but yes, if it's a medium-term view for the investor, he can hold on to the stock.
Okay, the next query comes in from Sujata Chaturvedi, who's written to us from Rajkot. She wants to get a medium-term perspective on hotel stocks. Mayuresh, first to you on this. Hotel stock, and especially now in this year-end time, looking good?
Yeah, everybody needs a holiday, Sumera, at this point of time. I think everybody's got locked up in their homes. And it's a given for this year, hotel stocks will have a washout year. What probably happens for the industry as a whole is that a majority of its costs are fixed. So when you take into account power, lighting, the kind of expenses that they have to meet out on their employees, that probably takes a lion's share. Now the room rates, or when you're talking about how the room rates are expected to play out, they're obviously going to be absolutely low in these quarters of the pandemic. And the sharp bounce back expected to come next year itself. The other element that hotel stocks probably look at is from all these business events. So I think the MICE events that the hotel stock cater to and the F&B revenues, which are high gross margin business for the hotel stocks itself, those are very, very important components. Fourth, I think in terms of a balance sheet perspective in the listed space itself, I think you probably need to bifurcate in terms of hotel stocks having a larger amount of leverage and still carrying a huge amount of a capex plan going forward and less leverage on their balance sheet. So stocks like EIH, for example, or even Indian hotels, the debt equity ratios are quite manageable. Even something like a small property like a Taj GVK, which is based out of the south, has a very, very reasonable amount of debt. On the other hand, something like Lemon Tree has high elements of debt. So you probably need to understand that profitability is something and cost optimization, which the hotel stocks will probably look at in terms of revenue loss at this point of time. So yeah, I think FY22 will be a blockbuster year, both in terms of FY21 being a very, very low base effect and expectations of huge expectations on all these elements binding together. But our own sense at O'Neill is that you probably just need to give it some more time. I think it's still lagging in price, it's still lagging in its EPS strength because of all these factors. But I think opportunities will come through. So yeah, I think not at this point of time, but yes, the next quarter or so, I think there might be opportunities around the corner for these stocks. But I think these elements will come at play in terms of less leverage and how these stocks are placed on the overall parameters that I just discussed.
Okay, up next, we have a caller on the line with us from Tamil Nadu. Nelson has joined in. Hi, Nelson. Good afternoon. How can we help you?
Yeah. Hi, Smara, and good afternoon, team. So my question here, I bought ITC 8,000 share at rupees of 183. So my question is, should I hold or should I sell? So that's my question.
Okay, Mayuresh, I guess a lot of people must be regularly asking for advice on ITC. Well, here's somebody who's making quite a bit of loss and he wants to know what he should do. I don't think there's any emotional attachment because Nelson says, he's okay to sell, I guess, because he wants to know should he hold or sell.
So you're absolutely right. I think Mangalam is one of the few guys who tracks it very, very well. And what has happened over the past few quarters is that the underperformance has been very, very stark compared to its peers. Yes, the cigarette business contributes significantly from an EBIT perspective, but the other businesses, Sumera, are catching up speed. So I think the capex that they're putting up in their other businesses and the clear focus in the other business contribution to the overall EBIT, whether it's the hotel sector that we just spoke about, or the agri sector, or the other FMCG sector, which has done phenomenally well during the lockdown in terms of reported EBIT margin numbers as well. I think that is where the focus would lie. But I think it's been a clear underperformer, and it goes through phases like this. So I think I was going through some reports which is showing that comparisons drawn between HUL and the other peers as well. And there are moments when I think numbers will start coming through and the stock will perform. But at this point of time, absolutely, I think we being growth investors, I think love growth stories. And again, I think ITC is just not fitting the bill at this point of time. So you can hold on, but I think we still like growth stories within the specialty chemical space, the rural theme. I think that is where I think the juice is in terms of reported earnings.